This module covers the F1 paper Part C, Accounting and Reporting Systems, Controls and Compliance. Here we will cover section C.1, the relationship between accounting and other business functions. We will start this section by looking at the accounting function and its relationship with other business functions, particularly the procurement, production, and marketing functions. Firstly, let's look at the accounting function itself, also sometimes called the finance function. The main roles of the accounting or finance function are to record all financial transactions in the organization and report upon these transactions, perhaps also conducting analysis to help interpretation of the numbers. A simple example is for the function to record all sales in a given period and all costs in the same given period and produce the profit and loss account for the management of the organization to inform it as to how it is performing. Other basic reporting on current financial transactions might also include a balance sheet showing the business's assets and liabilities, and cash flow statement showing cash inflows and outflows in the organization. Typically, such activities are conducted by the financial accounting section of the accounting and finance function. The function will also produce other business, financial, and numerical analysis to help understand the ongoings in the business. This might, for example, include financial forecasts, which attempt to predict what will happen to the business in the future based on inputs such as the transactions already formally recorded, indicating perhaps of future customer activity and future changes to the economic environment, and so on. Such business analysis might also include analysis of business performance, unrelated directly to financial transactions. For example, analysis might be conducted on the number of units produced per day in one part of the business versus another, which might prompt an investigation to understanding why the numbers are different. It may also be evident from analysis that the costs being borne in one unit are higher than another unit for the same levels of production, prompting a more in-depth analysis. This type of function and business analysis is carried out by the management accounting section of the function. Finally, the function may play a critical role in supporting key decision making in the organization. This might include financial assessment of decisions such as the entry to new markets or the production of a new product. If, for example, an organization is contemplating entering a new market for strategic purposes, it may first wish to understand the likely financial implications of doing so. For example, it may be that entry will certainly cost the organization money as regards marketing, promotion, sales effort, and so on. The accounting and finance function might measure the likely total costs. Entry to the market might then also generate new sales, which the function will seek to forecast. From this, it may then generate a likely profit and loss account for the entry, perhaps forecasted over a number of years. Such analysis might be further enhanced by, for example, compiling the financial forecasts under different scenarios. Each scenario analysis might seek to help management understand the financial outcome given different success criteria or different economic criteria. For example, it might forecast a lower sales number assuming that there is a scenario involving a decline in economic activity. It may be further enhanced again by looking laterally at impacts of such a decision on other parts of the organization. For example, possible cannibalization of product sales and so on. This sort of financial analysis gives some assurance to management as to the decisions they are taking, but giving a financial analysis which can underpin the decision to proceed or not to proceed. Thank you.